Is there any difficulties you guys finding
in unmuting? Or we can unmute all.
No, that's still be a difficult thing. All right. So the important aspects, especially on the implementation side, when you looking to adapt for this corporate tax, so you need to look into your accounting system, certain changes you have to make, specifically the grouping of your expenses and related party transactions to be identified separately. And also you need to look into your accounting policies and especially distinguishing business expenses, non-business expenses. That's needs to be, because until now there is no requirement for clearly distinguishing business non-business expenses. But going forward, since it's it's going to be an important thing as well, and your capitalization, the fixed assets capitalization policy or assets capitalization policy has to be reviewed as well, and what you can capitalize, what you can't capitalize. Look into it also. And also there is one more adjustments needs to be looked at is unrealized gains and losses, only for capital items, not for the revenue items. So you make any provisions on receivables, provisions for non-moving, slow-moving inventory, these are all allowed as an expenses. Whereas you make any such provisions against the
receivables
and capital items, so it's not going to be allowed as expense. You need to adjust in your tax return. So there's this another things you need to look into it. And particularly as of now, they didn't set any limit for a transfer pricing. Transfer pricing, even if you have a smaller value of transaction between a related party happens, either you have an income or expense between related parties, even though all the related parties located within UAE, still this rule applies. And so the compliance with the transfer pricing is going to be, very important, and sometimes depends on the kind of service or a transaction. The fixing a pricing is going to be a complicated task. So it requires a benchmarking study, so which is accessing certain databases. It's going to be the task as well. So that also needs to be looked at. Right. So anyone wants to raise your queries, please probably you can raise your.
Otherwise,
yeah. So if you all are fine, and if there is no queries, then we could look into it the next session. Yeah. Which we will be organizing probably in a month's time. We'll announce it.
Yes.
Yeah.
Hi, Gopal.
Hi.
Hi. So I have a question regarding the free zone persons, be qualifying free zone persons. When do you think we'll have more information regarding this one?
It should be happening any time because since it's applicable from 1st June, it should happen at any time. But so far it didn't, especially what is qualifying income? They didn't define it yet. And what is the substance, adequate substance? They didn't define it yet. And but as a part of transitional provisions, transfer pricing compliance, you can prepare for it. But I could give you some glimpse, like based on the consultation documents which Ministry of Finance published last year. The qualified income based on the consultation document is not as per the law now, published law. Based on the the consultation document, qualified income is as long as this free zone company earns income from providing services or supply to other free zone company or rest of the world, it's qualified income. And if you have any small amount of revenue coming from the mainland, then you will lose the benefit of zero rating, and entire income will be subject to 9%, like standard rate. Up to $100,000 you'll have zero rate, and anything above $100,000 you're going to be having 9%.
As Sir said, it is purely based on the consultation paper.
Yes, it's not
Okay.
based on
Yeah.
the law. It's based on the consultation document. Yeah.
Okay. Thank you.
Welcome. All right, I'll wait for another few minutes. If all of you fine, then we can conclude this session. And yeah, we can move on.
Yeah. We'll close by 3:45.
Right. Yeah.
4 minutes.
If you got questions, I can continue, but if you guys doesn't have any questions to ask for, we can get it closed. So,
The address will come also.
yeah. Yeah, as part of your tax planning aspects, you guys can look into to segregating your businesses. You can look into kind of an restructuring requirements of your business in such a way that segregating your business, whatever your business you do in the free zones in the rest of the world, maybe segregate them separately. Or if you're a free zone company, if you have any mainland business, then you can segregate them as part of creating a mainland branch kind of thing. So which will help you to support with the you can able to minimize your tax expense. Looking at these aspects, you can able to minimize your tax expense. And yeah, as a part of the your implementation plan, you can, this is one area probably that you can look into it broadly, like where and all you could able to get the exemptions and minimizing your tax expenses. It can be explored so that you will have minimal corporate tax expense.
And those who are having the borrowed funds, leverage things, they should see about
They need to
the
look
capping.
into thing. And
In
also
capping.
there are cases I could come across where normally so it used to be a practice where the group companies between the group companies they borrow at interest free. That's no longer it's going to be interest free. Since it's this arm's length rule comes into place, so it has to be it has to be some cost at a arm's length. It can't be interest free anymore for a taxation purpose. For accounting purpose, they can keep it as interest free. For corporate tax return purposes, compliance purposes, they have to charge some interest between the group companies if there is an outstanding balance between the group companies. All right, so thank you for you all joining for this webinar, and we will see you at a later date. So once we have more updates and clarifications on the key issues, which we were hopefully in a month's time we should be having, we will schedule another webinar, and more than happy to see you all once again. Thank you.
Thank you all.
Right.